How to play tap trading. Tap trading is a product that lets ordinary people like you and me participate in leverage trading the short-term fluctuations of Bitcoin. The interface has three main features. Trading has never been simpler than with tap trading. There are three buttons: buy, sell, and close all. The line in tap trading gets its dynamic movement from high leverage and high volatility. It's actually the only product on the market that allows regular people to participate in second-space Bitcoin trading with high leverage and high volatility. Tap trading also provides a way to control risk. You can maximize the protection of your assets by limiting your orders using the stop-loss function, and because of the fact that all orders are automatically closed every 5 minutes. Let's take a closer look. This is the buy button. If you think that the price of BTC will go up, click this button to buy. When you think the price has peaked, or whenever you'd like to sell, you can sell it by pressing sell. Your profits are immediate. If you think that the price of BTC will fall, you can click the sell button to sell it, even if you haven't bought anything yet. In the market, we call this a short. When you think that the price won't go any lower, you can press buy. Again, you can earn immediate profits. When you want to close all of your positions, you can click the close all button to sell your sell positions or buy your buy positions. So far, so simple, right? But there's a lot of different information that can help to enrich your experience and your assets. Firstly, how exactly can you make money through this? It's quite simple, really. Buy low, sell high, or sell high, buy low. You can make money from the market no matter what the price does, as long as you predict correctly. Okay, so what kinds of strategies can increase your chances of predicting correctly? Let's go some of the most basic trading strategies that we've gathered from our tap trading experts. The greedy whale. One of the special features of the tap trading product is that when the Bitcoin price is fluctuating a lot, the tap trading chart can amplify the market trend. Tap trading can sometimes see a price increase or decrease of 1,000% in just 5 minutes, meaning that if you buy or sell at the right time, your revenue can increase tenfold in just 5 minutes. That's one strategy that we often see traders use. That is, try and predict the overall direction for the 5 minutes, buy or sell, and wait for your prediction to come to fruition. This prediction can be derived from Bitcoin's overall trend, other information, or just your gut instinct. Like a greedy whale, the logic behind your strategy is to look for an opportunity where you can make a huge profit at once. If you predict that the price of BTC will go up and you buy at point A and your prediction is correct, you can make a profit of 300%. Of course, if you then predict incorrectly and buy again, and the price goes down, you could then lose 200%. So, how can we limit our loss in this case? We can stick to our greedy whale tactic, but at the same time, we can use the automatic stop-loss function to limit the loss caused by a potential error in prediction. In version 1.0, we actually got 300% of the revenue in segment A, but we lost 200% in segment B. If we then add an automatic stop-loss during the second prediction, we can keep our profit of 300% from segment A and limit our loss from our second prediction to 10%. This way, we are still profitable and we keep our gains from the initial correct prediction. Tips. Learn how to predict BTC trends. Who does this strategy work for? Those who are firm in their judgments of the short-term BTC trends can read or predict short-term BTC behaviors based on overall trends. When does this strategy usually work? when the price of Bitcoin is fluctuating a lot. Hard-working bees. If you carefully observe the fluctuations of tap trading, you will find that even when the market doesn't have massive trends or fluctuations, there's a lot of micro movements up and down. By capturing as many of the small fluctuations as possible, you can actually quite easily cover the transaction fees from your buy-sell activity, and also make a gain from your predictions. Just like a hardworking bee, though you're moving in smaller increments, you can eventually build a huge gain. There are quite a significant number of tap traders who use this tactic. They don't pursue a huge gain of 300%. Instead, they take frequent trades quickly. The goal is to make some profit every time, perhaps 5% or 10%, and accumulate these gains throughout the round. However, it should be noted that if the direction is wrong, it is also necessary to stop the loss in time. Simultaneously, you can really use the stop loss function for tap trading with this tactic. Just set the automatic stop loss to 10% and the automatic take profit to 20%, and all you'll need to do is to place your order to buy a point, then let the system automatically cash you out. It also keeps you from being greedy. Of course, you can never set your stop loss based on your own experience. Tips: be quick and busy with your orders to improve your winning percentages, and don't be greedy. Who should use this strategy? People with a fast response and strict discipline. When should you use this strategy? When Bitcoin prices are not that volatile and there are a lot of small fluctuations in the market. The wolf. Once you become proficient in the first two basic tactics we've mentioned, you can start to mix and match the advantages of both strategies. Essentially, you can use the bee tactic when the chart is not massively volatile, and when you see a chance, you can hold out for your position for a big profit. Just like a wolf, you enjoy small game. But if you get your teeth into a big buck, you shouldn't let go. After a big increase or decrease in the price, the chart might return to smaller fluctuations before again going to a big fall or rise. If you can switch between the bee strategy and the whale strategy, then you have a better chance of capturing all trades. Tip: know when to change strategy. Who should use this strategy? Have the ability to predict Bitcoin trends, and also be disciplined enough to observe when smaller fluctuations will break out into a bigger rise or fall. When should you use this strategy? You can use these strategies in most markets. Serious professor. There are also those who want to base all of their decisions based on research and real-time learning through observation. For this strategy, what you can do is study all the details on the tap trading interface itself. The trick is to try and minimize any guesswork. So let's take a look at what information is available to us on the tap trading screen. First, there's the BTC price. This represents the price trend of BTC and the immediate trend of the market, so you can try and make a prediction based on this. And then there are the red and green buy and sell bars on the top of the interface. These represent whether the users playing tap trading think that the market is going to rise, so they buy, or whether they think it's going to fall, so they sell more. You can get an idea for how most people are forecasting the price in the next few seconds. You can try and buy and sell based on those red and green bars, but then again, everyone might be wrong, and the real price movement is just coming from a few people. What do you think? The other thing that you can do is study how to set these parameters for the stop loss function. If you set the parameters at a too low of a percentage, your order might get closed even though you had the right prediction, but there was a fluctuation in between. If you set your parameters too wide, then the cost of your error might be too high. Your parameters should be set according to what the market is feeling that day, and also how you think the players in the market are behaving. If everyone in the market is setting their parameters to 10%, then you might get completely different results from setting your parameters to 9 or 11%. In another example, you might choose to set your parameters at greater percentages when you know that the fluctuations in the market are greater, and smaller when you know that it's a relatively stable market, and you might see massive falls or spikes all of a sudden. So how do you decide when to buy and sell? The chart is moving every second in real time. That might seem very overwhelming and random with no predictors. However, if you are a mature, high-frequency trader, you might know that all fluctuations actually follow a pattern, but that each pattern happens at specific times. You just need to know when to apply which pattern. Most traditional traders like to use monthly charts to analyze trends. Some people look at the daily charts. For tap trading, you need to analyze the seconds level market. So what methods can you use to analyze this? Some people will buy or sell as soon as the chart is changing directions. Some people will only place an order after 2 consecutive changes. For example, someone will buy after 2 consecutive rebounds in the price. There's actually a term for this in the trading world. It's called the bottom of the W. Some people will sell only when the price rises twice in a row. That's called the top of the M. Yet others will only buy if the price breaks through the former highest point, or vice versa with selling. As to which methods are more efficient and which are more likely to fail, these are the questions people who fancy themselves the followers of the professor's strategy study. By constantly trying out different rules and seeing their results, you can try and nail down a strategy model that really works for you and provides consistent returns. This strategy certainly works for the traditional high-frequency trading market, where a lot of short-term traders make money day in and day out. They definitely don't have their jobs because they're lucky. They have their jobs because they've studied different rules to match to different scenarios, and they stick to these carefully designed algorithms to generate massive amounts of wealth. Finding stars. This is a strategy that is very popular with many traders all over the stock and crypto market worlds. It can also be very effective in tap trading. The strategy is to find and follow the advice and tactics of the pros. If you know someone who you know is good at tap trading, you can try copy trading by following their moves on buy, sell, close all. It might be the simplest and most effective. But remember, you can't blame them if it turns out their predictions are wrong. We hope that some of these strategies have helped you to understand the different ways you can profit from tap trading. As you might have realized, although there is no single right formula for every round, there are definitely ways that you can drastically increase your chances to profit, and profit big from tap trading. Want more tips for tap trading? Make sure you've registered on BXB Exchange. We'll send you trading tips every Monday to your email box.